Good evening. Welcome to The Big Question here on NDTV Profit. I'm Vikram Oza, and tonight, a seemingly technical regulatory tweak that could fundamentally alter the way that your money moves every single month. So the RBI, the Reserve Bank, has rolled out a major upgrade to its e-mandate framework for recurring digital payments, and it redraws that balance between convenience, control, and risk across India's payment ecosystem. So here's what is changing, and let me take you point by point. As far as recurring payments go, of up to 15,000 rupees, they will now go through without an OTP. So in key categories like insurance premia, mutual fund SIPs, credit card bill payments, that no OTP threshold actually rises, and it rises sharply to as high as 1 lakh rupees. Not just 15,000, but in certain cases, 1 lakh rupees as well. But there's a catch, and you could call it a safeguard. Every auto debit must be preceded by a mandatory 24-hour pre-debit alert. You have to get an alert 24 hours. This is mandated by the RBI every time it has to go through without an OTP. So it clearly spells out the merchant name, the amount, and the debit date as well. So there you'd have it in front of you, this debit alert that you are supposed to get. Customers can opt out. They can, of course, pause. They can modify, they can cancel the mandate at any point. And this they can do directly from their bank app. So no merchant approvals are required, so there is no friction. Post-debit alerts are now compulsory as well. And those come along with grievance redressal details. So banks and payment players, they cannot charge customers anything to set up or run these RBI mandates according to the new framework. And RBI has now extended customer liability protection for any unauthorized transactions to recurring payments as well. So that's the addition. On paper, this is a big win. It's a big win for transparency. It's a big win for user control for consumers like you and me. But once you step back, the picture grows a little more complex than that. For consumers, when we talk about fewer OTPs, they mean smoother, the set and forget kind of payments, but also the risk that money could move out more quietly than it did before. So for India's booming subscription economy, and that includes those OTT platforms, the fitness apps, the SaaS providers, for them, revenue predictability could actually weaken because cancellations and pauses become just one tap away. For banks and card issuers, the compliance and liability burden goes up, even as the margins stay pretty capped. So all this comes at a time when trust in digital payments is already under strain. So according to RBI data, digital payment fraud has surged 11-fold from 2.6 lakh cases in the year 2021. The number of cases that you're seeing now in 2025, that has gone up to nearly 28 lakh cases. So the value of fraud has exploded. From what was once 551 crores, it's gone up to 22,900 crore rupees. In fact, a local circle survey is showing that 7 out of 10 users believe that digital payment fraud is rising, with strong public demand for those alerts, for the delays, and for instant kill switches. So here's the real issue. In a system that we're talking about with the fewer OTPs, the faster auto debits, the higher limits, the question is, has the RBI struck the right balance between ease and security? Or are we setting the stage for business disruption and new consumer risks? Which is why we've asked the big question tonight, and it's up there. As we're seeing this new framework by the RBI come into play when it comes to digital payments, is this about customer control? Is it the ease of being able to make the digital payments? Or is this going to lead to that much more business chaos? That's the important question that we're asking, and we're taking that across to our panelists joining us on the big question on this debate. Let me introduce you to them. On the show this evening, Sunil Kulkarni is joining us. He's a fintech advisor and a veteran voice on India's digital payments and banking landscape. Good to have you. Sharat Chandra is also with us. He's founder of EmpowerEdge Ventures. He's got decades of leadership across technology, innovation, and financial services. Jaspreet Singh is also with us on the panel. He's a partner at Grant Thornton Bharat, closely tracking the regulatory change and, of course, its impact on businesses and financial institutions. And Sachin Daparia is with us, the founder and chairman of Local Circles, giving voice to consumer sentiment and, of course, public trust in digital payments. So let's get straight into the debate, gentlemen. But just, I want to say at the outset that if you disagree with your co-panelist or even agree and have an additional point to make, I would suggest you just raise your hand and I'll come to you as quickly as I can. But first to you, Sunil Kulkarni. Now that RBI is allowing users to pause or cancel e-mandates anytime, removing that need for OTPs up to 15,000 rupees and sometimes even higher to 1 lakh rupees in certain cases, how do you see it, especially from a system design perspective? Is this a genuine upgrade to you, or are we fundamentally changing how trust operates in these recurring digital payments?
Yeah, first of all, thank you, Vikram, for inviting me. This particular circular from RBI is a combination of all the past circular plus additional customer grievances issues. So in 2019, they started with 2,000 without an OTP. In 2021, they upgraded the 2,000 rupees to 5,000 rupees. And in 2022, they upgraded it to 15,000 rupees. So this 15,000 rupees was there earlier also. All that they have done is that they have now combined all these circular, and in between also, I would like to correct that it is not OTP. It is called now additional factor authentication,
right,
which could be through SMS, it could be through multiple methods by which you could potentially give the second authentication over and above what you are doing it. So what they have done is actually brought the customer grievance method as well as the unauthorized transaction method also in that, and to make the entire system very robust. And while we are talking about increase in fraud between 2020 and 2025, if we look at the total number of transactions that have happened in these 5 years, it is more than 11x. So in terms of actual value, the frauds have come down, but since the basic transaction volume has gone up, we suddenly see such large frauds. And in the last 24 months, bulk of the work RBI has done is also to bring fraud under control. In fact, they had set up a committee for digital payments intelligent platform.
Has that worked? Has that worked?
Yeah, so it is clearly a work in progress. And compared to the total number of transactions, I would say that what has been shown here in this particular guideline is no different than what it was there before.
All right. So you're saying it's a continuation of the RBI stance on this to make digital payments that much more consumer friendly, to have the checks and balances where they are required. So the removal of OTPs is there. I mean, of course, as far as the removal is concerned, you're saying it's getting offset by the additional factor kind of, okay, that a subscriber has to give. But Sharat Chandra,
also.
Yes, it was there. It was there, accepted. But now that we are seeing this coming together of the entire framework together with the various circulars, Sharat Chandra, for subscription businesses, whether they are OTT platforms, they are the SaaS players, the gyms, etc., you know, the recurring payments, they are the predictable part of their businesses. So their cash flows is dependent on it. Does giving users the chance to do any kind of frictionless cancellation, does it turn the assured revenue into uncertain income now?
To a great extent, yes, Vikram, and thanks for having me on the show. What this new mandate has also done is, though the intent is good, but the kind of disruption and friction it brings to the businesses like SaaS players, OTT platforms, and even lending fintechs. Just look at the size of SaaS startups in India. So we have close to 2,000 funded startups, and the business which generated in FY24 was more than 15 billion. So this friction through this particular mandate can bring a lot of uncertainty into their cash flows as well, right? And this will also in turn impact investments. Let's say that they want to raise another round of capital. So this will also get impacted to a larger extent. What I would say or specifically highlight is there are certain category codes. For example, look at education for that matter. Schools 8211, where a 15,000 cap will not suffice, right? Especially in tier 1 cities like say Bangalore, Delhi, where the expense might be on the higher side.
Yes.
If someone has set up a mandate and then that person is not available to receive the OTP, that transaction won't go through, and the impact on, let's say, someone going for a tuition or a college might also get impacted. So there are different ways in which this can create a lot of friction.
Yes.
I
For
believe industry
businesses.
should be given more time to respond to this.
So you're hoping that businesses are going to get a chance to respond to this. Jaspreet Singh, what do you say? You know, as far as we are saying, the 24-hour mandatory pre-debit alert, it sounds pretty consumer-friendly, and I'll check with Sachin Taparia what he thinks about this. But what about you? Realistically, does the pre-debit alert empower users, or do you think does it simply remind them to cancel services that they may otherwise have retained?
So two things, right? One is I'll probably bring in a cybersecurity angle perspective first.
Certainly.
Uh, is the fatigue piece, right? How many times will users for each of their SIPs receive OTPs or any of the EFAs, right? If users receive too many alerts, they may start ignoring them, which weakens the very safeguard with which this is being designed to protect them. But also look at some of the other risks like account takeover risks, right? If my or a user's bank account or an email or phone is compromised, then the attackers can keep regenerating recurring debits will keep flowing till the time the user notices that there is no pre-debit alert.
Yes.
Phishing and social engineering attacks will just go through the roof because I can then generate fake, cancel the payment or modify this payment or verify or mandate SMSs or messages. And this would actually lead to a much more burden on the banks to look at false positives that they are being generated.
Right.
So I think we need to probably give more time to industry to react to some of these changes from a cybersecurity perspective, especially
Fair
the
point.
alert files.
Fair point. Sachin Taparia, from the consumer perspective, how good is this? I was looking at some of that data that came through our local circles, and it shows that 1 in every 5 families has experienced some kind of UPI fraud or the other. And this in the last 3 years. That's what your data is saying. So when you have data that paints that picture on UPI frauds, would you say that fewer OTPs actually make users feel safer, or do you think they are more exposed to frauds when you do not need an OTP for transactions under 15,000 rupees? Though, of course, I have been corrected that it's just a replacement. But what do you make of the overall takeaway for consumers right now with all the circulars now coming together in this new framework?
So overall, Vikram, this is a very positive move. I think here, what is happening, there are two issues at play here with, what RBI has come out with. The first one is digital fraud, right? Which is, the data that you shared, 1 in 5 experiencing a UPI fraud just in the last, 3 years. From an authentication perspective, people want to authenticate transactions that are above a certain value. They want that added authentication. So 15,000 plus, people actually want a 10,000 plus, value being authenticated through additional authentication. So I think that is something that with additional transparency, with more control given to the users, I think there's a lot of support for it.
Right.
The second big issue related to this is dark patterns. This is something that we have discussed on your show in the past.
Yes.
But both on banking apps as well as digital payment apps and other apps that many of us use regularly like OTT and others, this is a huge issue. 97% platforms in India, even today, even after the Consumer Affairs Ministry issued a Gazette notification in 2023, still have dark patterns. Right. So, on banking apps, on digital payment apps, you have issues like subscription trap, where people feel that they bought this subscription or they were made to buy this subscription on a trial basis, and now there is no option to cancel it, right? So with what this auto debit alerts, what they do, to people is they at least give them an option. Even today, what is happening is people are ignoring their SMSs anyways. But if they want to cancel, because there is a charge of, let's say, 399 a month for an OTT platform that they don't watch, it gives them an option to be able to cancel it. And that's the beauty of,
So will this control dark patterns?
Yes, it will. So subscription trap hidden charges, and interface interference.
Sunil
These are the top.
Kulkarni, let me take that across to him. Do you agree this is going to control dark patterns? Is this something that you see the regulator has been able to draw the right red lines where they should be drawn? Will it work for businesses as much as we're hearing Mr. Taparia say it's going to work for consumers?
Yeah, so I think all of us remember the few years back on telecom, we used to get caller ringback tones and lot many content, and there was a subscription of 10 rupee, 15 rupee, 30 rupee, and automatic debit used to happen every month. All of us were a part of that, and a very large number of millions of subscriber times 30 rupee is a very large number for the operator. What TRAI did was they asked the customer to first confirm, and again, at the time of debit, again, they wanted that to confirm. Now that they have done it for the purpose that the numbers were very large. So what I agree with him that the affirmative debit, every time there is a 24-hour notification, and post transaction notification also will make sure that if you want to cancel it right on, you have damage control. Right now, if you don't do that, there is no damage control.
Correct. So you think this is going to help, but Sharat Chandra, if a phone is compromised, perhaps malware gets in, the auto debits can quietly go through. So in a low friction system, is there the risk, that risk window before fraud detection? Do you think that can actually widen here?
Very much. And in fact, this is where I would say to some extent RBI's guideline on unauthorized payment transactions, right? I think the cap is around 25,000 rupees.
Yes.
So that might offer some solace, but again, we will never be sure of the quantum of risk, additional payment fraud, which can be perpetrated using compromised device. So we also need to factor in that particular aspect of cybersecurity. Very much.
Jaspreet Singh, under the new framework, now banks are explicitly liable for authentication failures in the recurring payments, but they cannot charge customers for these services. You think this is shifting the operational and the financial stress squarely on to banks and the payment players?
I think this was always there, right? They are providing services and they are liable to look at fraud detection and to make sure that there are adequate cybersecurity measures in place, right? The only thing is with this, the pattern recognition will become much, much stronger. I would know that these are the number of users where this is the number of SIPs that will go in the next 24 hours, right? And I can then do a pattern analysis saying how many are canceling. And if the threshold 15,000 is also a very decent threshold for a lot of OTT players, SIPs, etc., this is a big enough amount. But if I have to perpetrate a fraud, I will have to be 14,999, which is not a very small amount from an SIP perspective, multiplied into number of times I do this.
Yes.
So the banks would also then have to look at these pattern recognitions, these false positives, to make sure that there is a balance between ease and use of security.
But you know, Jaspreet, while looking at Mr. Taparia local circle survey, it shows that 40% of the fraud victims, they've clicked on payment links unknowingly. And 50% of them are saying that their UPI PIN was compromised. So does making payments simpler increase vulnerability? Is that what is going to happen, or does it underline the need for stronger digital literacy at the moment?
So stronger digital, you can never argue a case against stronger digital literacy.
That's true.
That will always be the case. But look at, I made this point around alert fatigue. Today, imagine if you ignore 5 SMSs or 5 messages, tomorrow you start getting 25. 24 hours before the transaction, during the transaction, and then post the transaction. Right? It could genuinely lead to a fatigue, and scamsters can use to trigger more messages, and inadvertently you might click on one of the wrong messages, which could lead to a compromise from a security perspective.
Sunil Kulkarni, with these higher liability exposures, you think banks could become overly cautious? Would they start blocking legitimate mandates as well, or tightening the back-end checks to protect themselves? Could that be a fallout?
Yeah. So first, I like to react to what Jaspreet mentioned, the links that are being mentioned. So in the last 6 months, there is also a new rule. 2 new rules have come. One on payment aggregator. This came in September 2025. And second came on current account to merchants. So please note that this particular circular that we are talking about is for merchant, consumer to merchant payment. It is not consumer to consumer payment. If you see, bulk of the frauds that UPI frauds that we are talking about are all P2P collect frauds. Majority of them have been P2P collect fraud. So when we are talking about this particular payment, first, RBI has made the payment aggregator guideline extremely stringent for merchant KYC. If you look at that guideline, it is fairly robust guideline for merchant KYC. So that is, again, onus is on banks and regulated entity. Secondly, current account and opening and their KYC have been also, again, the purpose and all those have been made very stringent. So overall, the infrastructure which was responsible for a lot of these frauds have been made further strict in terms of compliance. And I would say that even in this case, when we talk about recurring payment without additional factor authentication, the onus will be on the banks to check whether there are patterns emerging where suddenly there are multiple transactions happening below 15,000 where there are no additional factor authentication. That's why the initial pre-24-hour debit intimation and post-transaction debit will help customer to at least know. But I agree with you that a compromised phone, that's a problem. But how many of them we can actually control is something that needs to be seen more by the Android and the Apples of the world, where they want to make sure that no spurious software is installed.
Sachin Dipare, I was also looking at that data, and it's worrying because over 50% of users who have faced UPI fraud have never filed an official complaint. So even with the stronger alerts and controls, now I wonder whether the low grievance usage could weaken the safety net that is being put in place by the RBI here.
You know, clearly, Vikram, there is work to be done in terms of grievance redressal for such complaints, right?
Yes.
I mean, typically what happens is in many of these cases, because there is such poor awareness, you know, when some kind of fraud happens, people basically go walk to their local, police station. And that's where they go and try to file a complaint. And the answer that they get, based on our survey is that, "Arey, ye to online hai, ya this is digital, and therefore we can't do anything about it." Because our police stations are not sensitized to handle such complaints, basically.
Right.
And if you're lucky, they'll point you to the cyber, portal and all of that. So I think the solution here really is giving more control to the user, which is, you see mention of features like the kill switch.
Yes.
and all these, pre-approvals and post the transaction, sending the user a message.
Yes.
I think these things will work for the user. And my expectation is that, we need to look at this not just in isolation, but also in conjunction with what TRAI has been doing, right? So
Correct.
sending bulk SMSs has actually become much harder than it used to be 10 years ago, right? So a fraudster being able to send an SMS to millions of mobile numbers is no longer possible. Right. So therefore, you may have those one-offs. I think one of the previous speakers talked about peer-to-peer type of fraud transactions. And yes, they could happen. But doing this at a mass scale, I think, is going to become increasingly harder. So therefore, I think this model will work. And then it also, with all these dark patterns, getting addressed, which we hope, right? RBI has given the banks till about July 1st to fix their dark patterns. I think it is going to move us towards a more transparent control and cleaner regime in terms of digital payment transactions.
Let me ask Sharat Chandra if he agrees with you. Sharat Chandra, does the full user control improve financial discipline, or do you think it's going to make spending more impulsive, more fragmented?
I would say it's a mix of both because awareness of users or how they use these particular tools also needs to be factored in, right? If I were to pick up on what Sachin said about lower grievance redressal numbers, the post-transaction notification should also carry grievance mechanisms, right? But in many times, people are not filing redressal or not looking for those mechanisms. Is that because they do not know how to do it? Maybe language is one of the barriers, right? So this is where I think technology also has to be applied so that the new set of users can use let's say, any language to file a complaint, right? It can be vernacular. And this is where I would say some of the local startups, for example, Servam for that matter, where they're building indic models which can help some of the users to file complaint in a vernacular language. So that process also has to be made simpler for people who are using digital transactions for the first time.
Right. Of course. So, Sunil Kulkarni, if I was to look at the big picture, you think the RBI has struck the right balance between convenience and control and security? Or do you think this kind of reform picture that we are seeing, the new framework coming into effect, it's only the first step in a much longer correction that we need? And if so, then what are the next steps?
Yeah, so I would say that, as I mentioned earlier, that they started with 2,000, then 5,000, and then 15,000. So it was a progressive number, that 15,000 was not brought on in one shot. And secondly, in this circular, they have brought in the pre-24,000, post-24,000, and in fact, in the SMS or communication that is being sent, the customer grievances information also is given that if you have not done the transaction, please click here. So from that perspective, this is a reasonably balanced one. But again, I would say that whenever such circulars are issued, the feedback over a period of time also leads them to change or amend for better. So it is not that it is cast in stone. If they find that there is a significant amount of disruption in the complaints or frauds, etc., they would be coming up with corrections like they have done in the past.
So like you said, it's work in progress. It's work in progress by the RBI, the kind of new framework that we are looking at for e-mandate, those rules decisively tilting the system towards user control and transparency. But yes, it is a convenience. It's going to come at a cost because payments are getting faster and friction levels are falling. Now, the burden of trust and vigilance and failure management is shifting sharply onto the banks, onto the platforms, and of course, the underlying system. So this is not chaos, perhaps, that we are looking at, but it is a stress test for India's digital payments backbone, and we'll see how well we do. My thanks to Sunil Kulkarni, Sharat Chandra, Jaspreet Singh, Sachin Taparia. Thank you for joining us and adding depth to our debate this evening. And to you, our viewers, of course, is an important takeaway. Even as we're seeing the development of our digital payments system, it is important to realize that as much control as consumers get, it is also imperative to understand that it does come with higher risk as well, and the balance has to be managed really well. We'll keep tapping into this issue, but for the moment, from me, Vikramosa, and the entire team on The Big Question, thank you for joining us. Good evening.